Hello, my name is Michael Konnert. I'm the founder and CEO of Vizsla Silver, where we're developing the world's next great silver district in Sinaloa, Mexico.
Michael, good to see you again. Happy New Year to you, sir. We just wanted to kind of catch up because I think it's been a while since we spoke, but you put out last week the 2024 review and the 2025 outlook, and I just want to kind of catch up on some of that. So when we start with that, looking back, some key strategic decisions made last year. What are the things that you think are going to set you up nicely for 2025 that you managed to achieve?
Well, I think last year we did a really good job of setting ourselves up financially for what we're doing in 2025. So we ended the year with about $130 million Canadian, so just over $90 million US in the bank. And that has set us up perfectly for what we're going to do. And raising that money was really on the back of some excellent milestones. We put out an industry-leading PEA with incredible economics, MPV to CAPEX ratio of 5 times. So truly industry-leading, unlike anything that we've seen in the silver market in a very long time. So, we fundamentally shifted from a solely exploration company into a development company last year in 2024. And on the back of that, of course, we've been able to raise the amount of money that's going to set us up to develop this asset going into 2025. So we have started at the end of the year, at the end of 2024, we started our test mine, and that's ongoing right now. This is going to be a permanent entrance for the mine that we're working on at Copala. It's going to allow us to de-risk the project significantly. We're also working towards a feasibility study. So last year, the PEA really set us up to go directly into the feasibility study in 2025. And we're working very diligently on project finance. And again, that PEA last year set us up to work on project finance with various lenders, allow them to really understand what the project looks like when it's in production.
Right. If I look at your timing around that rate, but you raised a lot of money. Off the back of a PEA, you said that a few times. I think standard behavior would say you probably don't do that sort of thing until you enter feasibility phase. So what was it? Was it the fact that your share price was kind of on a rip, almost doubling from the beginning of the year? Was it because you weren't sure silver was going to hang around at these sorts of prices? I mean, what was the kind of actual driver for that?
Well, the driver from this and I look at this often as put myself in the shoes of the investor. And if I'm an investor in a company, I want the management to basically de-risk the future of the company by ensuring that there's a significant amount of capital to accomplish not only the near-term goals. And for us, the near-term goals, again, are the test mine, which we're fully funded for, the feasibility study, and then exploration drilling that we're doing in the east. So we're well funded for that, but we're also funded for the next phase, which means that, if we get our permits quicker than we expect, and if we can move this project into production quicker than we expect, we won't see that pressure from the market expecting a financing. We can go to we can go out and say we're financed to do this next phase of development, and the market's not going to punish us and force us into a discounted financing. So it allows us to de-risk not only the near-term milestones, but the next phase of milestones as well.
Well, it definitely does that. And obviously the money was there when you wanted it, which is, I guess, an indication that people, believe you can deliver what you are going to deliver. So as a kind of, pure play silver story as well, are there many of them out there at the moment, talking to investors? Were they sort of up to speed with the possibilities?
Well, I think that's the key. The landscape of silver producers and silver developers is quite sparse. There's really only a handful of meaningful silver primary producers out there. And because of that, they command a higher premium. They trade at excellent valuations. So I think it's pretty easy for investors. And we have an incredible group of institutional investors and just retail shareholders as well. So I think a lot of them have come from companies and having success in companies like Silvercrest or Aya or Mag Silver. And can see what this development phase for silver companies, what kind of returns that can create for investors. So, it's different than gold. There's a ton of gold development projects with 1 to 3, 4 million ounces out there. Whether they're good ounces or economic ounces, that's different. But there's really only a handful of development stories at all in silver, and there's really only a a small few, Vizsla certainly included, that have any real economic value. So I think that's what sets us apart. It allows us to raise money from excellent institutional shareholders and these bigger financings. And we've started to see over this last 6 months or 9 months from the PEA that our share register has started to cycle into some of these longer term, bigger investors that you typically had seen in the share registers of companies like Silvercrest and Meg Silver in the past.
Right. Okay. So your support's there when you want it from the right sorts of people that registers, turning into something quite attractive. But if I look at this kind of fast track to production strategy that you've got, are there things that you were in control of in 2024 where you maybe learned some lessons, or even things that you're not in control of where things have been going wrong out there when companies are moving through that development phase into production? What are you conscious of? What are you aware of? What are you trying to mitigate?
Well, in terms of things going wrong, let's say nothing really goes too wrong that ample time can fix, right? So it's more delays than major issues. And so we've looked at that, and we've we've seen how other silver companies, developers in Mexico, the issues that they've gone through. And of course, our COO, Simon Smirlik, left Ausenco in the spring of last year to join Vizsla. And Ausenco's one of the world's top turnkey mine builders, and they did that for Silvercrest. So he had just gone through the development and the building of Silvercrest's process facility. And he knows firsthand from that there's certain lead items, there's things that you need, like the CFE power. That was another lesson from Meg Silver as well. You want to give yourself ample amount of time to get these things that you need to go into production. So we looked at that and said, okay, well, if we want to do that, then what we want to do is we want to do a PEA that's more than just a desktop study. We want to do a PEA that includes some engineering. We want to do a PEA that gives us really the numbers and the amounts and the calculations that we need to set up for making these decisions, like the power decision, making the mill size decision, and sticking with it as we go into the feasibility. So that in turn has given us the ability to start permitting earlier than other companies may. And that gives us a longer period of time then to get that permit, so things aren't as critical as you go through that permitting process. It also gives us more time to go and talk to the CFE group, the power supply utility in Mexico, and make sure that we're giving ourselves the right amount of time for that. So, what we've learned, we've tried to learn not from our own mistakes, but from others' experiences. And we've tried to incorporate that into really the time frame that it takes for us to move from advanced development into production.
Okay, so if I look at some of those aspects, if you look at the test mine, for instance, right? You have stated on multiple occasions there's a kind of fast track to production, right? Off the back of PEA, I think a lot of people kind of claim that. But what are you actually doing with regards to this test mine? Because you're not talking the usual language of, oh, we've done some network. Oh, I wish, what I mean? This seems much more advanced. So let's talk about what that test mine actually looks like today.
Well, what it looks like today, and I was there last week, and it's a box cut right now. So we're cutting into the side of a mountain, and we're shotcreting and reinforcing the wall, making sure meshing the wall, and making sure that it's safe for us. And then we should start blasting here very shortly. And this is going to be a 5x5 drive that goes in and basically does what we call the fish hook. We'll start to see some updates and news out on the fish hook here soon. But this decline will basically come in and come under and intersect Copala and allow us to start developing an ore on Copala. And in total, it's just under a kilometer of development. We should finish that this year in 2025. And what that gives us is, you're right, it gives us, we could talk about metallurgy because we will do more met tests with that material, but we'll reconcile how the ore body sits against our drilling and the work that we've done from surface. And we'll understand more about the geotech and the rock competency and everything like that when we're underground. But most importantly, it allows us to extract ore from Copala, bring it above surface and stockpile it. And the real important thing there is that, this industry is fraught with, again, learning from others' experiences, um, fraught with the issues with starting up underground mines. Now, Copala is a 10-meter thick vein. We still call it underground narrow vein mining. I mean, it's a very, very thick narrow vein. It's probably 10 times the average thickness of an underground mine vein in Mexico for a similar deposit. But nonetheless, it is underground mining on veins. So there is risk with that. A lot of times companies can't keep up the mining rate to feed the mill that they've already, that they've just funded, and they can't, meet their debt obligations and things like that. So we want to make sure that we have enough material above surface that can feed the mill when it starts off and make that very rapid payback. And if you've seen our PEA, it talks about a 9-month payback period. That was at the prices that we published the PEA. At spot prices today, it's probably more like 6-month payback. But we don't want to take any risk here that we don't have to. So the test mine really is all about de-risking and decoupling, I should say, the startup of the mill, the risks with the startup of the mill with the startups of the mine. So it's really important. It's something that we saw Silvercrest do as well, and that's been something that was very successful for them.
Okay, and if I look at this 5x5 box cut, you're calling it a test mine, but this would be the entrance to the mine once you get going. This isn't a case. This isn't a test. This is you're getting after it now.
Exactly. Yeah. So that's part of that shortcut to production. I shouldn't say shortcut, but rapid approach to production. So we've selected the mill site. The mill site's a stone's throw from this test mine. Ideally by the time that the mill is constructed and ready to go, we'll have already had a large portion of first year's production above surface out of this test mine, and be using this test mine to mine further. It'll allow us to access basically all of Copala. It's well designed.
Right. Okay. And if I look at, I guess, some of the features that you'd be quite keen to kind of get a re-rate off the back of the feasibility study, and shareholders and people looking at this will be looking to understand the timing of that in some cases, so before they deploy capital with you. So you've got a bit of wiggle room here in the sense that the silver price is doing you a lot of favors. You said that there's nothing sort of highly contentious about the plan. It's really a case of do things happen within a timely fashion. So there's a bit of wiggle room there. What does that look like over the next year or so? And when do you get into production? That's what people care about, I guess, with a 6-month payback.
Yeah, well, I care about that too, and we're excited about that, as you might be able to tell. But we do, and I should say again, we're fortunate. We have one of these stories where we can talk about production at project number 1, and then also talk about this huge district upside that we have here. But our focus is to get project number 1 into production in the second half of 2027, and we've been explicit about that. We're comfortable with that time frame. The thing you before you mention things that are in our control, and what was in our control was the study that we were able to do around around the mineralization that we have. We can kind of control the speed that we do these studies. We can somewhat control the speed that we go out there and make exploration, make discoveries in a sense. But what we can't control is the permits. And that's something that I would say I'm not nervous about it, because I've had meetings with the government, where they've told us that they want to expedite permitting. At the end of last year, I met with the government in Mexico City, and they said that. And then in January of this year, they came out with an economic document that Claudia provided. And on the very last page, it talked about the mining industry, and it said expediting permits for mining through SEMARNAT. And then a few weeks later, we saw Alamos receive its permit at the Mulatos mine. So we're starting to see permits roll in. This is excellent. I think that's also part of some of the potential. It's a small re-rating, but I think Vizsla is still massively undervalued. But we saw a slight uptick in the share price of Vizsla here. And I think as we start to see more permits being granted, there's going to be a re-rating on that. And I think that's imminent here. So we can't control that. And that's really a big part of that time frame, but it is looking positive, more positive than I think that it has been in the past. And really on the back of positive permits, granting of permits, the feasibility study, which we're expecting to have in the second half of this year, and then project finance, which of course we made a lot of progress towards in 2024, we could be constructing this mine, in say the first half of 2026. So it really isn't that far away, if certain things kind of go positively for us. And I don't have any reason to expect that not to be the case.
Okay, so the team is very much focused on that objective. Let's get this thing started into construction in 2026 at some point. You'll test more the closer we get, and once you've understood the kind of financing and so forth. With regards to the other bit of the team's role is this. You've got some planned drilling out there, and in terms of getting that balance between the kind of geotechnical expansion, exploration, etc. How do you prioritize between that, and is that a kind of standalone team kind of feeding into the feasibility, or is that just kind of de-risking exercise for the future?
Well, fortunately, we completed a lot of the drilling that we needed to do really into the end of last year, and that came out with that updated resource that we put out in the beginning of this year, which saw 43% increase in M&I. Now that gives us over 222 million ounces that can go onto this updated mine plan. So it's a 43% increase in input into our mine plan. So I'll let people kind of think about that as it pertains to the feasibility study. It should be positive for the feasibility study. So we've completed that infill, so we don't have to do a ton of infill in 2025. That gives the geology team, more ability to step back and think about discovering new centers of mass outside of project number one. And of course, project number one, $1.5 billion NPV at today's prices. It's an incredible mine, but that's really not all for the company. We've got, centers of mass that we've seen sprinkled throughout the project, mostly to the east, that we're going to be testing. And I think any success on that could be really momentous for Vizsla, because it means that, not only do we have this project number one, but now we have a line of sight towards, the next step of organic growth. So could we have another mill at one of these centers of mass in 5 years time, 6 years time, and then producing another 5, 10, 15, 20 million ounces of silver equivalent annually? I mean, that grows the scale of what we're doing here at Vizsla substantially. So any small success when it comes to discovery in the east could have major implications in the future.
Right. Okay. And along the same vein, last year we saw a lot of the companies that were able to tell the story of near-term production or production, i.e., revenue components of their story, got rewarded in what was a very difficult market yet again last year, no matter what the metal category. So in terms of your message to the market here is we're not, anything that we're doing, we're not getting distracted by any form of remaining drilling that we're going to be doing. Will you be distracted by things like M&A? Because again, we're seeing a lot of cash-strapped companies out there, a lot of deals to be done. Is that too much too soon, or do you think you should take advantage of that when you can?
Well, I think when we look at the M&A landscape, there's really nothing out there that we would like to prioritize over what we're doing. We think that this is the best silver development project in the world, and we want to develop it and we want to get it into cash flow as soon as we can, and then use that cash flow to grow organically or look at M&A opportunities. So it's not something that occupies a lot of our time right now. It's things that we looked at. We do look at things selectively and opportunistically in a sense, but where I actually see the best M&A value for us, for Vizsla, is near where we are right now, is consolidating this, what we believe is a world-class silver district that really hasn't seen any consolidation in the past. We were the first company to consolidate this district in modern history. So, we're looking at this as our opportunity, and anything external to that, we don't, brush off immediately. Of course, we'll look at things and try to understand if there's value in it. But so far, we haven't seen anything that really adds the same amount of value as what we're doing in our district. And so I do think that there'll probably be more news on that front in 2025, where we may see, further expansion to our land package. Of course, in 2024, at the end of 2024, we ended up tripling our land package. So we bought La Garra to the north, we bought San Enrique and El Richard to the south, and now we have, we started with 7,000 hectares. We have over 30,000 hectares now in the Sinaloa silver belt.
Okay, so a conservative and moderate behavior because you think in terms of organically, that's possibly the best way you can allocate your capital. Okay, your share price rose 45%. Someone kindly noted down for me last year. It was meaningful. Possibly even more actually. Just looking at it now. What do you think because you've referenced this in this conversation, you said, right, maybe once people start appreciating some of the things that we're doing, we might see, further uptick driving this. Clearly, I think feasibility study, clearly getting the financing in place, and so will allow you kind of move forward into kind of, FID, feed and build phase. Is that it? Or do you think there are kind of macro factors out there which are also going to help sort of get you noticed and drive the share price?
Yeah, I think that there's just a natural move, about a 3 times change in PNAV as you move from developer on our stage here. So it's about 0.5, 0.4 to 0.5 times NAV in the development space on average in the silver sector. And then when you get into production, you can trade as, even up to 2 times NAV I've seen in the past, but, typically around 1.5 times NAV when in production. So for us just to continue to do what we said we're going to do this year, feasibility study, test mine, I mean, in a sense that is production. Of course we're not milling and we won't be running it through a mill. It's stockpiling. But that just shows you how close we are to production. So inherently, I think there's a 3 times NAV multiple change for us, just doing what we're going to do. Now, at the same time, again, this is project number 1 going through that NAV multiple change. It'll be the world's largest single asset silver primary producer when it's in production. It's just on the outside of Fresnillo's major mines in terms of scale, which is incredible to have this in our own company. And but that doesn't take into account, like I said, further acquisitions within our area or kind of growing our land package here and then demonstrating to the market through through discovery that we have the ability to show organic growth. And, I suspect that we're going to be able to show that 20 million ounces of silver equivalent production for more than the first 2 years based on this new resource that we have. If we can then add another 5, 10, 15 million ounces of silver equivalent on top of that, that puts us into a whole different tier of production. It looks like starting to look more like multi-asset producers like Hecla and Core and things like that. So we're excited about that. And I think that's where we're going to show a lot of growth. I think there's a heck of a lot of discovery left for us to be made, even within the map of project number 1, but also out to the east where we're exploring. And then we haven't even set foot really since we acquired it on La Garra. And we haven't done any real work recently on San Enrique to the south. So there's a huge amount of upside here. It's just it's hard to quantify right now. But I think that as we start to kind of get into that and start to show what's possible, I think that's going to be what's going to give us a re-rating. If silver goes to $40 or $50, that's going to be excellent for us, of course, because we're producing at an AISC of sub $9. So that's an incredible margin. But we don't need it to. We really, we're going to be a very high margin producer at most silver prices out there.
Right, and let's look at you referenced it earlier because the type of register that you're starting to get here. See the TSX helping with that on the GDXJ, etc., helping with that in terms of that overall influence and liquidity. What else do you think you can do for that audience in terms of the kind of conversation and narrative that we've talked about today? Is that what they want to see from you? Do they want more? Because my banking days, it was all about M&A, kind of driving these sort of big moves. Or do you think they're happy with this kind of a creative, sensible, conservative approach to getting after the silver sector?
Well, I think just maybe even to kind of answer this a little differently, I think what they love is that silver. Again, there's such a lack of quality silver names out there, and they want silver because they know we're in a 5th year of a supply deficit. That silver, it probably has the most attractive supply and demand equation out of any metal here, and it's such a small market that any real movements in that can cause the price of the metal to multiply, very rapidly. So I think they like that. And then when they look at the silver equity space, they go, well, okay, which one that's actually reasonably going to move into production in a reasonable time frame in a jurisdiction where you can get permits, where you can operate, and then who has a team that knows how to do it. And I think, with Simon here, a guy that's built 40 mines around the world, you can look at that and say, okay, well, this is pretty de-risked on that front. Plus they have 90 million in cash, et cetera, et cetera. So, I think just by the nature of where we are in terms of the development phase, the quality of our asset being a top tier world-class producing asset when it's in production, that's what attracts them. But I think they look at it holistically from the top down though to start and see what's so attractive about silver. So, I think as we continue to market our story, and we do an incredible job of that, Mike Pettengill, who leads that for our company, he's on the road constantly, and he's working very, very hard to get our word out. And I think as we kind of appeal to more and more investors, inherently we'll have more buyers, and the share price will go up.
Right, and I've got to finish. I've got to ask this question, and I appreciate your Canadian company with a Mexican asset, but tariffs, Trump, Mexican tariffs being imposed by Trump. I think there's a stay of execution for another month as of this morning. People are nervous. I think it's more about the kind of more broader context of just being a little bit nervous about the markets and tariff wars, etc. What does it actually do for a Canadian mining company operating in Mexico?
Well, I think there's a flight to security in the sense of people like to buy gold and silver in times of uncertainty like this. So it's actually good for our underlying commodity. And I think, if you're a American investor, strong US dollar versus a weaker Canadian dollar, you can buy shares of Vizsla Silver on the TSX and use that, you get that benefit for your strong currency. So I don't see any major issues right now. And of course, we going into production, we can sell our commodity, our doré, to a Swiss company or even a Mexican buyer. We don't really necessarily have to factor in the tariffs. At the same time, we're doing as much as we can to really understand the implications, but as far as we see so far, there's no major long-lasting implication. And I think we had this, we kind of joked about this before getting on air here, but Trump literally wrote the book, The Art of the Deal, and I suspect that these tariffs aren't going to be enforced for a very long time. I suspect that there's going to be some concessions made on the Mexican and the Canadian side that'll allow for these countries to work together like they have for decades.
I suspect you're right, Michael. I suspect you're right. Anyway, what fun as always. Look, great to catch up with you. Hopefully see you in PDAC in about a month's time, and so let's compare notes on what we think's changed in the market. Appreciate your time today.
Sounds good. Thanks, Matt.